Welcome everyone. Today we're going to tackle a really fascinating question, one that's kind of at the heart of all trading. You ever wonder if you could actually predict what the market's going to do next? I don't mean just follow along, I mean really get ahead of the curve.
I know. Building your own secret tool to predict the market? It kind of sounds like something straight out of a movie, right? But believe it or not, this isn't just some hypothetical idea. For some of the most legendary names in finance, this is exactly what they did. They weren't just playing the game, they were literally creating their own set of rules.
Think about pioneers like Ralph Nelson Elliott or W.D. Gann. These guys didn't just follow the crowd. They built their own frameworks to make sense of it all. So what was their secret weapon? Well, it wasn't just about being smarter than everyone else. It was about having this really deep understanding of the market's hidden psychology. Okay, so let's dive into this and see how you can start thinking just like they did.
All right, first things first. Before we can even think about building our own tool, we have to understand the core theory. You know, the very foundation that makes any indicator work in the first place. It's a surprisingly simple idea, but it's super powerful. It all comes down to this idea of technical analysis. The theory is that a financial chart isn't just a bunch of random squiggles. It's a reflection of everything known about an asset, and more importantly, it shows us the collective psychology of all the traders involved. So when you see an indicator, you're not just looking at lines and numbers. You're looking at a visual map of human emotion. All that fear, all that greed, that's what's really driving the price.
Okay, but here's where it gets a little wild. How on earth can a mathematical sequence that someone came up with back in the 12th century have anything to do with predicting the stock market today? I mean, it sounds a bit out there, right? Let's look at a classic example that really shows how this connection between old-school math and modern psychology actually works.
Yeah, the good old Fibonacci sequence. You've probably seen it before. 1, 1, 2, 3, 5, 8. You just add the last two numbers to get the next one. Simple enough. But here's the crazy part. It's not the numbers themselves that matter so much, but the ratios between them. And for some reason, these specific ratios seem to tap directly into human psychology.
So you get what are called Fibonacci retracements. These are just key ratios from the sequence, which translate into these psychological levels like 33%, 50%, and 66%. And here's the kicker. Because so many traders are watching these exact same levels, they become self-fulfilling prophecies. People place buy and sell orders right at these points, turning them into real support and resistance. So it's not magic, right? The math is just a way to identify these predictable patterns in human behavior.
Okay, so we've got the why down. We understand that indicators are all about decoding market psychology. Now, let's get to the how. It's time to talk about the blueprint, the actual paths you can take to create one of these things for yourself.
So you've basically got two options here. On one hand, you can create what we call a unique indicator. This is where you start from scratch, using raw ingredients like price and volume. Think of it like a chef creating a brand new recipe. Then on the other hand, you have hybrid indicators. This is more like taking a few pre-made sauces that you already love and mixing them together to create a totally new flavor. You're combining existing indicators to build something new. All right, so let's get down to brass tacks. How do you actually build one? This brings us to a clear 5-step guide, a blueprint that can take you from just an idea in your head to a real functional tool. Okay, so here's the process. Step 1, choose your type. Are you going unique or hybrid? Step 2, select your components. What are your building blocks? Are you using specific patterns, some math functions, or existing indicators? Step 3, create the rules. This has to be super specific. Exactly when does your indicator signal a buy or a sell? Now, step 4 is maybe the most important part. Test, test, and test again. You have to backtest it on historical data or paper trade it with fake money to see if it actually works. And only then, after all that, if it's actually producing good returns, do you move to step 5 and go live with real money.
All right, theory is great, but let's make this concrete. Let's walk through a custom example right now. Imagine we want to create a unique indicator to predict price swings. Let's say you've been watching a particular stock and you notice something, a specific repeating pattern that other people seem to be missing. This is where your edge comes from.
So, here's what we do. For our pattern, we've identified these bullish and bearish price swings that each seem to last about 5 days. Okay, interesting. For our math function, we'll just average the size of the past climbs and drops to project what the next one might look like. And finally, for the rules,
We'll predict that a move of that same average size is going to happen, but it will alternate direction every 5 days. And just like that, we've defined a pattern, applied some math, and set clear rules. We have our own custom indicator.
So, the big question, does it actually work? Well, after we backtest our new simple indicator, we find that it could have hypothetically returned 5% per swing. That's pretty cool, right? That's the potential payoff when you build something yourself.
So you might be thinking, okay, this is cool, but why go through all this trouble? I mean, there are thousands of indicators out there I can just use. What's the real payoff here? Well, it all boils down to one thing: gaining your advantage.
Ultimately, the whole point of this is to gain an edge over other traders. That's the key takeaway. It's not just about following signals. It's about developing your own unique insight into the market psychology that other people just don't have.
Think about it. When you do this, you shift from being just a passive user of standard tools to an active creator. And that process alone gives you a much deeper understanding of how the market really moves. You're not just following someone else's signals anymore. You're creating a system based on what you see and what you think.
And that really brings us to the final question, the one I want to leave you with. What's the market pattern out there that nobody else sees? What are you going to be the first one to uncover? Because that's the real journey here. It can give you a true competitive advantage in the market.